Ladies and gentlemen, welcome back to the channel. We have breaking news on AMC stock to get into here today. Now, the stock is pretty flat on the day. The S&P is down 0.5%. The NASDAQ is only up about 1/4. It's a pretty rough day out there. Economic data came in hot, sending bond yields soaring. These are things we need to talk about that are having an effect on AMC stock. AMC still holding up better than you would expect, given the S&P is currently down 0.5%. The charts look pretty good as well, so the work is cut out for us here in this video. We have a lot to cover in a very short amount of time. Hit the like button and subscribe to the channel if you have not done so already, and you like AMC stock. Maybe you hate the stock and you're just ready for the squeeze, or maybe you're here because you like the broad market topics that we cover. Now, any one of those reasons are fine with me. Let's go ahead and get into it. So AMC stock is down 0.38% at the time of recording this video. AMC stock is down 3 cents. Although we do have really good news today. The news is this: AMC stock rises on Beyonce's new concert movie. Whatever Taylor Swift can do, Beyonce can do better. Well, that's the hope of AMC Entertainment, which has struck a deal to release a movie version of Beyonce's most recent world tour. AMC said Monday that the movie of Beyonce's Renaissance World Tour will be released in thousands of theaters in the US, Canada, and Mexico from December 1st for a minimum of 4 weeks. The movie is being distributed by AMC, but will also be screened at Regal, Cinemark theaters with showings at IMAX screens as well. AMC stock was up 1% in pre-market trading on Monday. That's a smaller boost than the meme stock favorite received when it was first announced that Taylor Swift, the New Era tour, would be released in cinemas. That may indicate some investor skepticism that the movie version of Beyonce's tour, which ended on Sunday in Kansas City, Missouri, can match Taylor Swift's pull. Swift is on track for the biggest concert tour of all time, and the release of her movie will come while she's still performing. The movie version of Swift's tour is expected to pull in revenue of $100 to $125 million in its opening weekend when it opens on October 13th in cinemas, according to entertainment news outlet Deadline. While some analysts have said AMC could get a meaningful benefit by adding alternative content such as concert films to its typical offering, others have been more skeptical about how much they can boost its underlying business. AMC stock has fallen 87% in the past 12 months. And is down 78% in 2023 so far. These figures account for a reverse stock split earlier this year and the conversion of AMC preferred equity units, or APEs, to common shares. So this is important, right? AMC showing the initiative, doing different things to try to get more individuals into theaters. Now, you can make the argument that maybe this could sell more drinks, right? Maybe you get more of those premium products that do start to sell at AMC with these tours. You could definitely make, to some degree, an argument for that. But I think it just shows initiative at the very least with AMC, and this hopefully will help fill in that kind of void of a lack of movies that are actually going to theaters here throughout the rest of this year. So that's kind of my thoughts on it. Pretty cool. AMC should take a large chunk of the total revenue from that movie. Yeah, pretty good. The stock is not reacting to the way that you would think it would. Still being over here. I guess it is positive now by a little bit. It's positive 0.28%. You're just in the gulag, man. You're so destroyed on AMC stock. I think it takes more than a movie here, a movie there, to get the stock really excited. Now, in context there, you're doing pretty good on the charts. The charts look pretty good. The RSI is back to almost 31 after being oversold since August 22nd. So that is good. The MACD is positive ever since September 13th. And you're above your 8-day moving average. So I do expect there to be a strong week this week. And really why Why I think that is because heading into 2024, looking out, it doesn't make a whole lot of sense to be short on AMC stock. Your risk to reward looks very unfavorable. I've talked about this many times now, right? You just don't want to be short on AMC. What? The stock falls to $5? Cool, you get $3 of downside. What if the stock goes to 14, 15, 20? Just the average analyst price target, right? What happens then? The average analyst price target still is $16.63. That is after Jason Bassnett did lower his price target from $15.50 to $4.75. Even after that, the average analyst price target is still a gain of 108.16% from here. For hedge funds and institutions to make 100%, they would have to be shorting AMC stock right now and see the stock go to zero. The risk reward does not make a whole lot of sense here if you are short in AMC. So I think that is something to keep in mind. Again, that could create more bullish positioning for AMC stock throughout the rest of this week. Now let's take a look at some of the option activity that we're seeing here on the day today. And again, the calls are outstripping the puts. You can see total call volume of 79,000, about 620. Puts volume of 38,660. So definitely more calls being purchased here. And if you look at the option chain as well, we've talked about this many times. Let's see. For this week, you do have about 18,000 calls in the money, about 60,000 calls out the money. In the money puts at 7,500, out the money puts at 35,000. So, I mean, it's clear. People are bullish on AMC stock as far as the options are concerned. Some of these expirations are 3 times the amount of calls relative to puts. Now, once you go further out, it gets a little mixed, right? Like March 15th so far has a lot more puts than it has calls. And if you look at something even just nearer term, like October 20th, you have 90,000 calls out the money, 32,000 puts out the money. So it's really back and forth on a lot of these expirations. But overall, a lot more calls relative to puts. And last time we seen that, well, it was a long time ago. And if you look at the put to call ratio, again, it's been falling off of a cliff. And this is usually a point where you want to be bullish on AMC. You want to be positioned long during this moment, because I mean, any other time the put to call ratio was this low, you could see big rallies. Ever since the put to call ratio jumped to 1.6, 1.8, you just really haven't been able to get a super strong rally like we did over here, hundreds of percents, right? So as the put to call ratio does come down, I think that allows AMC stock to make a bigger move. So I think that will be pretty important if, 3 months from now we look back and say, hey, the put to call ratio dropping, that was a pretty good sign that maybe a rally was coming. So just my opinion, keep that in mind. You have a short score of 66. $175 million worth of short positions in AMC stock. Estimated short interest of free float at 11.06%. Free float out on loan at 13.47%. Shares out on loan 26.63 million. Days to cover 1.83. Cost to borrow 2.98%. Utilization of 55.01%. If you look over here, you got cost to borrow fees, about 1.4%. Cost to borrow average, 2.4%. Cost to borrow max, 6.17%. Cost to borrow minimum, 1.9%. You have 21.85 million shares that are currently sold short. Who knows what the number really is, guys? Keep in mind, you got to take it with a big grain of salt, because you really just never know. Now, let's take a look at what's happening out there today in the markets. The big news today, 10 o'clock in the morning today, you had ISM manufacturing PMI. This came out at 49. You were expecting 47.8. So a slight beat here, which is positive for the economy. Look at what it's doing to bond yields. 2-year treasury yields up 5 basis points today. 10-year Treasury yields up 10 basis points today, breaking out to a new high. Now, this is causing the inverted yield curve to uninvert today. If we go ahead and look, it hasn't updated yet for today. Last we knew we were inverted 44 basis points. You're only going to be inverted about 40 basis points after today's move. And same thing over here. It hasn't updated, but this is also going to uninvert at least a little bit more today. Typically, when this uninversion does happen, you are pretty close to going into a recession. So it's strange what is happening this time around. If you look at oil today, give it a second. Oil is actually down 1.55% today, so that is good. Now, if we look at the dollar, though, the dollar is rising over 0.5% today. Now, I would argue the dollar was the reason why we had so much pain in 2022 to begin with. This was the beginning of 2022. Right here. Right here where my cursor is. This was all 2022. Do you see the dollar? Just basically straight up. And then you kind of fell 2023, right? This kind of allowed us to get a rally here, because what the dollar does and why it's negative when the dollar strengthens, when the dollar rises, because if you're an Apple, you're a Tesla, you're a, any other company that does business in foreign currency, you take that foreign currency that you made in China, anywhere, and you convert it back to US dollars, you're going to get a lot less US dollars. Whereas when when in 2021 you took in foreign currency and you converted it to a weak dollar, you got a lot more dollars. So the higher the dollar goes, the more pressure it puts on company earnings. That's where you hear of constant currency. Companies will say, hey, revenue is down 10%. But it was only down 2% on a constant currency basis, meaning that if the current currency was just constantly at the same fixed rate. So, yeah, this is a headwind to company earnings, a headwind to valuations as a whole, and you're continuing to see bonds just dying over here. This means that maybe the banking crisis might not be over. If bonds just cannot catch a break here, then that could come back to haunt the market. So just keep that in mind. That's really what caused the banking crisis. It was their bond portfolio values dropping because bond yields were rising. As yields rise, the dollar amount of bonds, what they're worth, falls. So you could see from this chart, this is TLT, tracking the 20-year Treasury. It's falling like a lot. So this is something to be watching for as well. If this gets worse, more banks could be in even more trouble, guys. So that is going to go ahead and do it for this video. That's really everything you need to know. That's what's happening here on the day today. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.